Today, Trish, my co-host, has the opportunity to chat with David True. He's a self-described Fintech Geek and payment guru with over 25 years of experience in the industry. He has his own company, consulting firm named Paygility. He's the president of NYPay, a payment association based in New York City, and advises and mentors numerous companies and startups. We will include some of these links in the podcast notes. In reality, both David and Trish are fintech and payment geeks, and they actually have great conversations geeking out together, something that they do on a regular basis. They talk about David's experience working at AmEx and how it was at AmEx that he learned to always focus on the customer experience and how he brings this to every engagement. They also discuss some of the recurrent questions that Paygility customers keep bringing up over the years, along some of the most challenging questions they have had to tackle recently. In this podcast specifically, David provides some great insights about Zelle, the bank's competitor to Venmo, and more generally about around account-to-account payments. They even touch on FedNow, the Fed real-time payment system, and how its implementation may or may not increase the speed of potential banks' runs. If you are a payment geek, you will really enjoy this conversation. But even if you're just curious, you will be able to follow the conversation and learn a few new things. I hope you enjoy it.
Recently started the Ikigai Curious podcast to bring you interesting conversations with industry experts. Now, if you ask me what industries, it's going to be from Web3 to AI to digital product design. Now, today, it is payments, one of the topics most near and dear to my heart. Now, our guest today is David True. He's a very good friend of mine, going back now, David, I think it's about 12 years, right?
Something like that, yeah. 10 or 12 years for sure. We met online.
That's right, because back then, I was a newbie in the industry. I knew nothing about payments.
And you were living in London, I think.
That's right. And I reached out to you, and you were kind enough to really entertain my questions and help me and guide me to start learning about this world. And for this, really, I am forever grateful. And I've been bugging him ever since. And he keeps picking up the phone when I call him. So here he is.
It's a pleasure. So it's a pleasure to be here.
No, thank you. Thank you so much for your time. And also, everybody, he is my very first guest. This is the first time that I'm doing this. So we've been having problems with the technology. We've been having already a good time just preparing for everything to work to now kind of start the recording. So first of all, let me introduce you to David. He's a broadly curious guy. I think you would agree with that definition. He's actually in the advisory board for several companies. If I have them right, and I'm reading now, that's Minerva AI, Agora, Bankable FinTech, in Yifty, and in relatively recent past, also Sensei, correct?
Correct.
That's right. So that's a lot of them. Now you also have your own consulting firm, Paygility, and you're the president of NYPay, which is it's also an association for payment experts. I like to call ourselves payment geeks. Mm-hmm. You're also a startup mentor. You're an avid writer, publishing several articles pretty much every month, and you used to speak at countless industry events. Before COVID, though, you made that very clear.
Yeah, that's true. I don't get out. I'm getting out more, but not as much as I used to. So.
No, well, I'm certainly looking forward to that because it's he's awesome to listen to speak. But can you tell us a little bit, at least to start, about how all these pieces of your professional life fit together and how they feed and complement each other, and really how the companies you work with benefit from all that broad experience that you have, obviously from your past, but also even from today by working with all those different teams and groups?
Well, a lot of my life has been governed by serendipity, and things have just worked out in interesting ways. And I have been curious. I worked in many different domains. My first professional job was, or big company job, was at American Express, which was really formative in the way I look at things. But in that area, I worked in several functional domains, so that kind of broadened my curiosity about the way things connect. In American Express, even though it's thought of as a card company, it is at heart a marketing company, which is the way which governs the way everybody there thinks about things, about the way you talk and speak about the product you're delivering. But it is, that notwithstanding, it is a payments company. So that's how I became a payments guy, through an experience at American Express, which actually came about through an international connection, which is a whole other story. But how do these things connect together? Well, if you think about it, any time commerce goes on or transaction goes on, a payment is part of it, whether it's commercial payment or consumer payment. And I know more on the consumer payment side. So a lot of the companies I've gotten in touch with have started off with some sort of payment component. Payments have gotten very, very big in the last few years. So one common area of connecting is through the payments work at NYPay. I got to know a law firm which has hosted many NYPay events, called Davis Wright and Tremaine. And through Davis Wright and Tremaine, I got to meet many other people in the startup community, because Davis Wright and Tremaine is fairly deeply involved in that. And that has been payments as an indirect entree into other firms that generally are in that fintechy business, which then has led to a lot of the firms that I advise and startup mentoring. So ultimately, there's a thread that goes through all these things, and that there's a transaction involved one way or the other. But a lot of my background has fed into other areas of expertise where I think I can benefit the firms that I'm advising.
Got it. And let me ask you, because you've mentioned AmEx, that it's a payments, but it really is a marketing company. How has that experience with AmEx shaped the way that you look at payments today, that you look at products, and really that you try to bring value to those relationships and to the end user at the end of the day?
Because it is, well, one thing that Amex did, which I thought was very good, is they took everyone in the organization, down to associates. When you used to have associates, doing what associates did, everyone through brand training to think about what the brand signifies. So I thought that was very important, because that's a good way of keeping everyone going in a similar direction if you understand what your brand signifies. And the Amex brand, I honestly don't remember all the brand points at this point, because it's been so long ago since I worked there. But one aspect of that is customer sensitivity, being very aware of the end customer. They used to make heroes out of people who really went out of their way to benefit the customer. So if you think about benefiting the customer, that goes from both the way you speak about them, the way you understand their problems and solve their problems. And that's something, through my time at Amex, I started off in a very non-customer facing area. Midway through my tenure at Amex, it was the 1999-2000 dot-com period, and I actually got my first exposure to tech firms. And that was where I got more directly on the customer-facing side of Amex and worked with them. We were launching a new product with a firm that ultimately went out of business, like so many did back then. And all of that has made me almost intrinsically thinking about the way a story is told, the way attributes are explained, not through their underlying technology, but through the problem they solve, the way they make something about life easier. So that has informed so much of what I do these days. I see it all the time, in that people have excellent ideas, or excellent, particularly technology. They'll talk about the technology, but they haven't taken that through to say, why does anyone care about that technology? People care about things that fit into some story that they're telling, a problem that they're having, rather than the underlying way that occurs. And all of that started off with Amex. I mean, I think that's one reason why I also am very fond of the things that Apple does, and certainly that goes to your history too, because that's a company that thinks very much in that way, of the way it relates to the individual and the individual life and what it means to that individual through their daily activities, rather than saying how we do it.
Yeah, I completely agree with you. Do you see a lot of the companies that you advise or that you consult with, do you see them taking that approach generally, or is that something that you try to bring to the table and they they welcome it, or do they're like, yeah, no, not that important?
Uh, there's a point that I made to you earlier talking, I made to you before about that it was I sort of bastardized something else that someone else said to me about intelligent and smart. And intelligent being kind of the CPU you've got between your ears, and smart is the way you apply it. So you have tremendous amount of intelligent people running around doing things, but the way you apply it can be applied intelligent, can be applied in a smart way or not such a smart way. And for some people, and just like some people can sing and some people can't sing, you can really work hard to try to get good at it, but some people are just very good at it. Uh, Other people just can't, and I see that a lot in the startup world, in that they get so enamored of a particular way they figured out to solve a problem, that they fail to think about why people. It's almost like they can't carry a tune so well. So some of them just don't see it. In some cases, they say yes, but they still have a hard time doing it. Think about writing right now. We all read a lot. We read a lot of things that are talking about new technologies. And think about how poorly it's clear the writing is well done.
Yeah.
That goes with that notion of who am I writing for and why should they care? There was a very recent example, just the one that's really proximate, we may touch on a little bit later, was the press release that came out last Wednesday night talking about Silicon Valley Bank's recapitalization. And it was abysmally done. It was clearly somebody who wasn't thinking about who the audience was and what they really cared about. And honestly, I think that really contributed to a lot of the things that came immediately thereafter. And that was a poor understanding of the audience and how best to communicate something to them.
Wow, that's you brought up a fantastic point, and you made you did a really nice job at kind of doing the storytelling across that whole conversation. So that's really a very good point. And actually, since you brought up SVB, before we go into payment topics, what tell me what do you think that was the source of the problem? Obviously, there was a press release very poorly done, without thinking about, like you said, the audience and who would care about it and how it would impact that audience. But what do you think was really behind that debacle? That, as you well know, it certainly affected the company that I'm with, although everything's well that ends well. But what do you think? And what do you think is going to happen now, actually?
Making forecasts about what goes in the markets is something
fun.
that I can't even get into. I can predict there will be uncertainty for the next weeks, if not more than that. I don't think it's going to be anything really disastrous, but as people say, I'm not giving any investment advice here. No, I'm not going to predict what's going on in the markets. And there's so much has been written about this that I'm not going to try to rewrite or re-explain what people can pick up and read. But there was a combination. There were financial missteps, a interest rate lack of awareness of interest rate sensitivities and interest rate mismatch, and there was risk involved there. But a lot of this came down to the nature of any kind of financial system, and the banking system in particular. And a great writer, if you don't read him, you should always check out Matt Levine at Bloomberg, just stated it again today, just about how a lot of banking is a confidence game. You have confidence that you put that money there and that money will be there when you take it out. And that's it makes the banking system very strong, but it also is a weakness. Another thing that happened was I go back to a unawareness of a risk or lack of appreciating a risk, is that the folks at SVB really underappreciated the risk in their depositor base.
Yeah.
Because and many people have put together very good points about it. It was like somebody said it was like the table at a school cafeteria where everyone chatted and told gossip in between each other, and that was a very risky deposit base. So that made them all particularly vulnerable to any sort of miscommunication. Going back to the point I made a moment ago, and it spread really rapidly. So hindsight's very easy, as I always say, to go back and say all the things that went wrong. But honestly, if the recapitalization, which they had, basically, it wasn't completely done, but if they'd done the recapitalization overnight and announced that it was done, or if they'd made the announcement on Wednesday night in a better way, in a clearer way, it would have been interesting to see how much of this would have happened. Because if they hadn't gone down, if it had just been, was it Silver Lake? I always got them wrong. Is that the name? Is that the right name?
I know which one you're talking about. Yes.
The bank, the crypto-focused bank that went out
Yes.
the day before. If it had only been that, would we be where we are today? Since so much of this is confidence related. This is not people investing in assets that really have no underlying value. This is completely different than that. So that's an open question. I don't know the answer, but I think had it been handled better, I would argue we might not be where we are today.
Yeah, and I think because two things that you've said really kind of really resonate with me. One is I love talking about identity. And I think that if we had a good layer of identity across the internet, across finance, just across human transactions in the physical and the digital world, really a lot of problems would be solved, right? Because identity really gives you trust. And at the end of the day, I think my thinking is shifting from identity is at the basis of human interactions to really it's trust that underlies all human interactions. And without trust, things crumble.
And identity is a big piece of that because you need to have confidence that the counterparty, particularly in a virtual world where I can't see you. I mean, you can have fake identities in a physical world too, but it's a little harder. But in this digital world, that builds to that confidence. And we see that a lot in the fraud world, which is a whole different
it's
can of worms. So.
Yeah, no, but I think it is broader, right? It's identity is one of the things that you need in place in order to build that trust, but there's just a lot more that is required for that. But I think as well for SVB, the problem was that, and I know I'm exaggerating, but it really feels like they had about 40 to 50, not 1,000, but 40 to 50 clients, which are the big VCs that all these startups are being funded by. And so if your VC is feeling, this is a bit dodgy, guys, move your money out, of course you're going to move your money out. So it was just it was a very short dominoes that had to fall in order to really damage the bank. I mean, it was just a matter of 10, 15, 20 people saying, I don't trust you, we need to move out. And then they were in deep trouble. And that's, I think, exactly what happened.
Yeah, I've lost confidence. And then coming back a day or two later saying it was a great bank, it's a terrible thing that happened to it. And it's hard to hold anyone particularly responsible because if you're the investor, it's your responsibility to do things, to say things to your company that will keep them solid. But having done so and opened up that dam, it created a bigger mess for everyone. So anyway, we could talk endlessly about that, and it will be talked about endlessly, and there will be great case studies, I'm sure, written up about that in the near future. But there's many other things to touch on. But yes.
Because we hadn't talked about this ourselves.
Well, the other day when we were meant to have done what we're doing today, you were not able to because you had to resolve very practical daily things in running a business that were affected by the bank.
That's right. It was definitely top of mind, obviously, from when we started hearing rumors that there were issues. And of course, it's like, well, what is going to happen with our money? We were not able to move any of our funds, right? So we were lucky that the result was good, but to us, it was just as pressing as for everyone else. It's like, how are we going to make payroll the following week on Wednesday? Mm-hmm. Right. So it was really a whirlwind. But then let's change gears a little bit, because otherwise, like you said, we
could talk about this forever.
Yeah, and there are a bunch of things that I really wanted to touch upon. But two big questions that I always really have in my mind that I never actually get to ask you, because you've been with Paygility. I mean, you're one of the founders, one of the partners of Paygility, the consulting firm. And so I think it's a great place to be, because you guys are a boutique firm. You work it's mostly in payments, solving big payments issues for all types of different companies. And so I wanted to hear from you kind of two things, right? One is, what are the most challenging questions that you've had to answer lately with your clients, right? What are the big trends, the big worries that are keeping payments companies or companies that have payments, right? Because I'm big in embedded finance. What is keeping them awake at night? And obviously at a high level, what kind of advice are you giving them about, how to tackle those big challenges? And then the other question, which I imagine the answer is going to be different, but you never know, is what is like this question that keeps coming up across the years? And I always think of, a merchant asking you, hey, help me reduce the cost of payments, right? Because that's always top of mind, right? So I imagine that's one that constantly comes up. Is that the case? What are big questions and constant questions that you get?
Well, a lot of times when they come to us, I mean, it'd be nice if everyone said, "Come, build me a strategy," but that's not really the way the world works. When you got a smaller firm, a lot of times they're more plebeian questions that people want help with. They want to launch a new product. They want to know who to work with to get into market. They're looking for the thing about. It's been said often that if you were going to build a new payment system, you would never do it the way you had before. It's grown through accretion over time, so it's vastly complicated, and there's huge amounts I don't know about it yet. There's just detail upon detail layer. So a lot of times we're asked for help in digging through that, just something as basic as that. Big questions. I think right now, if there were one, there's a lot going on. You could debate how big it is, but with faster payments and just the adoption of faster payments. FedNow announced yesterday, I think they're going to be launching in July. NYPay, by the way, will be doing an event on that sometime, I think in May actually. So go to nypay.org and sign up for that when we get it posted. So that's a significant one because that will be moving to the extent that it takes off. It will then bring the U.S. To a level that many other countries have been to for a few years. So that comes up a lot. There's a lot of brain power being put against that, and Paygility actually has some work with the Federal Reserve. We got a contract with the Federal Reserve to help them out with some of that thinking. So that's the closest thing to a really big topic. A lot of the ones that I like to think about and just sort of mull over about what they mean are not ones that a client would particularly come to you and ask, because they're more, if a client comes to us, there's a particular problem they want to solve rather than thinking out exactly where they want to be in 5 years. Because like we've had some private equity firm portfolio companies who come, and usually it's something as just basic as, I got to make a decision, who should I work with to get this done? Something like that.
Got it. That's okay. That's really interesting. Let me actually, following up on your comment about FedNow. Let me share my screen for one
Please
second,
do.
Because I want to, this is the post on LinkedIn. Hopefully, can you see the LinkedIn?
It's loading. So, but I think you're referring to the post I made the other day, or the referral or the comment I made the other day.
That's right. So it was Caitlin Long, who is founder and CEO at Custodia Bank. And her comment, and hopefully people that are obviously just listening to us can't see it, but the people on video can. In any case, reading it, she said, if you think bank runs happen fast, just wait until FedNow comes online later this year. Today, withdrawing demand deposit takes hours, FedWire, or days, ACH. FedNow will be real-time, 24/7, 365, limited to $100,000, so that can do a lot of damage. Banks will inherently need to be less leverage, plus hold more liquidity. Now, your comment back was one of the many points brought to the fore by SVB collapse. I think I really have two questions. One of them, do you really think that it will potentially affect or cause more bank runs? But even beyond that, do you see, are you increased just generally? Are you worried, just generally about increased fraud with FedNow? Are you aware of any additional checks and balances being put in place to minimize fraud?
Well, two points. And everyone these days, if you notice, everyone in interviews these days says, great question, really great question. Have you ever heard anyone say in an interview, that wasn't a very good question? Or just be neutral about it? Thanks for the question. But anyway, those were good questions. So the one about the effect on liquidity and the rest of that, People learn from the last disaster, the last problem. So I think what has just happened has brought people will be asking about this now. They're going to be saying, "What do you think? The money moves so quickly." So the incremental speed of moving money with FedNow, it means something. But look how quickly $43 billion or 40-some
Yeah.
billion were moved out the other day. How much difference would it make if that went an hour or two faster? I mean, it happened so quickly. So it is something to consider. Um, but the fact that we've had the SVB instigated situation has just raised the awareness. And, people are always trying to solve the last problem. So everyone's going to be thinking about that in the future. There's probably some other problem that we haven't thought of yet that might come up and bite us the next time. So I don't think I responded very quickly that day because it was a day that people were responding quickly. Things were moving so fast. Um, but I didn't make a definitive statement on it because it was more, that's a good one to think about. And now that I think about it more, it's not going to make an enormous difference, uh, in part just for what I said, because people's awareness has been raised. To the point of fraud, that's a big one, but it's a more general fraud problem. Um, uh, 2 points that come up with thinking about my customer focus and putting my customer hat on. One of the challenges with faster payments is there's an irrevocability. That's hard for me to say. Um, and I think that will slow the adoption at a consumer level because, at least in the US, with the huge credit card penetration, we've gotten used to the idea that you can always dispute a transaction or get the money back. Um, Now, that generally eludes over or rolls a little bit over to fraud. The fraud problem becomes a bigger fraud problem. Um, and this gets a little bit weedy because I don't know Reg E that well, but I know Reg E touches on what banks are required to do, financial institutions are required to do in the case of a problem. Um, but a lot of fraud these days, and the most pernicious part of it, is not technological, it's psychological. It's people being tricked into moving money. And so you get tricked into moving money with Zelle right now, and Zelle doesn't really have a mechanism to giving it back. And what I expect will happen with that is that the CFPB will come down with some regulation that requires, or somewhere in the feds, some of the regulators will come back in some regulation, because the banks obviously don't want to be on the hook if you got tricked. The way it's said these days is if you are tricked into moving the money, a bank
It's gone.
doesn't want to give it back to you, so they just want to say, "Well, you did it. You elected to do that. It wasn't. There was no fraudulent agent in between. They just tricked you into doing that." But I think regulators will then compel the banks to take responsibility for that, and the banks will figure out a way to pass the cost on to us. So that is a problem. I don't see a real ready solution. I can see with the advances in AI, there will be more and more computing power put against the trackable behaviors that we have when we work online to try to say this suggests someone might have been tricked. But I haven't seen any good solutions doing that. That's me being optimistic about the solutions technology can provide. But I follow the fraud area fairly closely, and so far I haven't seen anyone who's really figured out how to get at that. There may be down the road. But what I really think will happen is that, at least in the U.S., there will be the banks will be forced to take responsibility for it, and they'll figure out a way to somehow pass the costs on. So,
Well, this raises a lot of questions in my head, but
sorry.
before no, but because one thing that really caught my attention, because you said hopefully there will be some software that will help us detect when you're being tricked to send money, right? And that sort of reminds me of friendly fraud, which is different, I know, right? Is when you buy something and then you basically decide that 99% of the time you pay for everything that you buy, but that one time you're like, oh, can I get away with it? And then maybe you say I never received it, or it was damaged, or you take a very lax interpretation of the return policy. And so and I've never seen a good solution for friendly fraud. So
People are trying. Visa just launched a new program that's got some cumbersome name, which will affect, they said, a small percentage of that friendly fraud, but it really involves in data. If the merchant is willing to go back in their history and say and provide evidence that within the last 15, 18 months or something, an individual has purchased similar things in the past, and now they're trying to dispute that they actually purchased something, friendly fraud, that they can shift liability away from the merchant, and allow the issuing bank to actually turn it down and say to the and say with confidence to the cardholder, no, you actually did make that transaction. That has just been launched. It was just announced recently, and that's an effort to get at a little bit of the friendly fraud. But yeah, that is a problem because
Yeah.
the complicated nature of the payment system, and I'm not going to get into all the details of it, with the issuing bank who actually has the customer relationship, and the issuing bank doesn't really want to irk their customer, especially if you're a big spending customer. So really, they don't want to turn down any dispute that you raise, unless they have very, very,
Yeah.
very, very good
Solid
reason to do
evidence.
so. So anyway, but yeah, the friendly fraud is starting to get attacked in little bits and bobs, and that's one example of this new program, the name of which, of course, escapes me, that Visa's just announced.
Oh my goodness. Okay, okay. I need to read up on that. David is always ahead of me, so I'm not surprised.
Not at all, not at all. It depends on the domain. We learn from each other.
That's true. Now, one thing that because you brought up Zelle, and you brought up that specifically in the US, because customers or just consumers in general are so used to using credit cards and the protection that brings to them. Do you think then that banks are just forever tied and forever linked to credit cards? And is this the reason? Because I think it was about 6 weeks ago that, we heard rumors, or there were some reports that some of the largest banks in the US were working together to launch a wallet, kind of similar to Apple Wallet or Google Wallet or even PayPal, right? And of course, my first thought was like, well, why don't they expand what Zelle can do? Why don't they do it the same way that they use Zelle for P2P? Why can't they pay at a merchant? And why can't they build some security and anti-fraud protocols around those payments? But what you're saying, I think the way that I'm interpreting it is, but Visa and MasterCard do it already so well in AmEx and Discover. Why reinvent the wheel and take on all that liability? The banks don't want to do that. So are they tied forever to the networks?
Okay, two or three different things there, and if we want to run a little long, we can run a little long. But first, the rewards-driven consumer will persist for a long time. That
That's right.
means the standard credit card is not going away for the foreseeable future. For gosh sakes, cash is still here. There's no payment method that's ever disappeared completely. But that's so driven by the desire for rewards that's going to be around for a long, 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 long time. So jumping over to the wallet idea, why is the wallet idea coming about? Many reasons for that. Part of it is that we want the customer relationship, and if someone is paying through a wallet, then they don't have a direct relationship with the issuing bank. I did write something about that got posted on a website for a company that I work with called Further Advisory, about the long road to hoe, to use that old phrase, for the banks to have success with that. But an underlying means that's going on. So why didn't they do it with Zelle? Because Zelle's not a wallet. Zelle's just something you do through your bank account. They may be building in from what I've read actually, the only payment method that they're envisioning using there is actually Visa and MasterCards initially, which is a limiting factor. And it's going to be built on a technology called secure remote commerce, which has been under
Okay.
development for a long time. Um, but will they have success? One reason they're trying to do it, I think strategically, the big banks have for a long time wanted to decrease their dependence on Visa and MasterCard. You can see what Chase did years ago when they set up ChaseNet, I guess, when they cut a
That's
deal,
right.
when they switched their volume away from MasterCard to Visa and got this deal with them. So the strategic thinkers of the banks, I'm sure, are thinking if they can be successful with this, maybe there's a way that they can someone's using our wallet and we can push another payment method, maybe something Zelle-like, through the wallet that we're using and decrease their dependence on Visa and MasterCard, because there's really no love lost there, particularly with the big banks. Um,
That's right.
I mean, they've been thinking about that for a long time. And some would argue that the Visa and MasterCard are so well entrenched, and I sort of grudgingly agree, that it would be very hard to dislodge them. They've been pretty nimble at moving basically arming themselves against threats from other different areas, and they have strong relationships with customers and with merchants. So merchants don't love them, but merchants can't do without them, so they're there. Because of the payments is always a two-sided piece. You got to convince a consumer, you got to convince a merchant to use it, and that's a challenge. So.
Well, really, what I'm hearing is that we're stuck with cards, and banks are stuck with cards for a very long time. So,
well, as I've said many times, that pie of payments, of electronic payments, is growing. So there will be space for other methods in there, but there will still be growth for the traditional methods because the pie is growing. Their portion of the overall pie, electronic payments pie, may be smaller, but there's still plenty of growth in there for them.
Got it. And I know that we're running up against time. My last question.
Keep talking if you like.
Just because I want to, from a wallet perspective, it's also in my head, and you and I have talked about this before, right? It feels they want to launch a wallet. They're just, 15 years, and I can't remember when PayPal was launched, but it was many years ago. And it's already been many years since Apple Wallet and Google Wallet have been around. And the thing is that all these wallets that we've been talking about, yes, they do payments, but then they also do, certain level of identity. They hold your boarding passes and your tickets, and they do many other things, right? Do you think that the banks will also try to provide this ancillary services? I'm going to say they will really try to replace your wallet, or that they will focus on payments? Because with just payments, I don't see how they can compete.
I'm sorry, something just popped up in front of me. They'll stick. They're not going to go anywhere with it, honestly. If I were a betting man, they might get some small share, but I don't see them having success, and I don't see them even trying to roll in other functionality. It's just too much of a lift. That business line, that part of the business, will eventually get shut down because it's just not making money. The only thing that might help, and you know much more about than I do, is in the identity space. If that becomes some way of validating identity, because some have argued. I mean, the famous Dave Birch has argued that banks are the logical place to be the what would be the word, validators or guarantors of identity. I'm not sure what the right term is, but that could be one play for them. But for something multi-purpose that you use a lot and becomes your go-to place to open up and use, that's going to be like Apple's Wallet, since it can do so many things. I mean, that's really my go-to, and there would have to be a real good reason for me to start using something else. In fact, I use the Apple Wallet for much more than just payments. I'm still actually taking out my card and tapping my card, weirdly enough, even though it was originally launched, and I'm a payments guy. But I open it up all the time for other things. For my Airbnb ticket goes in there. My when I go to the movie theaters, it all goes in there. So yes. That's that breadth of functionality makes it. Changing consumer behavior is hard, but that's begun to change my behavior because it can do so many things for me.
That's right. And it always goes back to that customer experience, customer utility, customer behavior, right? Mm-hmm. And I agree. I don't see that they're going to be able to shift people into their wallets, particularly if they're as limited as they seem that they are going to be. Okay. Well, this was, I had a great time.
We never even touched on crypto. My gosh, that's a whole other conversation.
But this is great because I hope to have you over not just once today, but a few times, because there's always so much to talk about in payments. And yeah, we had said that we were going to touch upon crypto, but maybe that's going to be the first topic we'll cover next time.
Yeah, and it will change you again. By the way, check out NYPay. We're doing something on the what FTX means for the future of crypto. There'll be a NYPay event, I think, in April on that. So keep watching the NYPay.org website. Okay.
Well, what I would like to do is actually maybe include some of those links next to the podcast, so that people can very easily access them, right? So for some of the key events and also about Paygility. And I also wanted to talk about your the companies that you advise and that you mentor. Okay, more things for next time.
There's always something to talk about. That's what's so great about knowing you, Trish. There's always something to talk about.
That's perfect. Thank you so much, David. And thank you, everyone. And we'll talk again very soon.
All
Thank
the
you.
best.
Take care.
You still there?